Welcome to 20 Minutes of Clarity, your go-to podcast
where you can make better informed financial decisions with the topics that we cover. And with me today, I have Andy, the man merchant, and I am Jason Noble, your host of 20 Minutes of Clarity. As we go into what is scary, this is an important thing that I'm looking at today is going into why do people get scared about going in and speaking with a financial professional? What could cause some of that anxiety or that fear, which could even prohibit them from even doing it? And I think it could be based off of what the industry has done over the last 20, 30, 40 years of really setting out this tone. But Andy, why do you think people are scared to go seek that financial advice?
Well, I love how you kicked us off here, Jason, right? It's our industry is called wealth management. We're wealth management advisors, we're financial advisors, whatever it may be. But how often, do our clients and our listeners that are out there not walk into a firm that starts with, basically an asset under management number, right? How much do you have to manage? We have minimums, or things like that. So I think the first challenge out there is that our industry has just kind of defined the term wrong, which creates a lot of fear in people coming in because, a lot of people today may be accumulating assets and not have the liquid assets for an advisor to manage. So I think they're concerned about it. They don't know the questions to ask. They may not go in with the right number. So I feel that we need to do better as an industry. We need to focus on helping clients make more informed financial decisions. Wealth management is just a byproduct of what we do. It's a value add that we can provide. And so I think that's the first thing. I think our listeners and our viewers need to know that, hey, you need to challenge your advisor more. You need to challenge the industry more, not make it about how much you have to manage, but make it about what kind of advice, how are you proactive in helping me make decisions? How do you become my personal financial CFO? I think are the real reasons is that the industry just have set the expectation that you have to have wealth to manage in order to get service.
And the wealth to manage is investable assets. How much
Yes.
do you have within retirement accounts or in trust or joint brokerage accounts, ignoring other types of wealth, which could lead into a good segue into, I think you had a scenario where person that reached out to get wealth advice had a lot of money tied up in real estate.
Yeah.
And so you were able to help them with our Clear Picture program. And there was a comment that I will share with the audience if you don't, that you heard him say after they went through the program. But tell us a little bit about that scenario just so that we could get an idea of a differentiator between wealth management versus wealth advice.
Yeah, I mean, even on those scenarios that we're talking about, I mean, oftentimes a client won't, and this particular client hasn't engaged with a financial advisor in the past because, in most cases, most of the wealth that the family had created was through real estate investments. And then there was no need to go through a traditional avenue of a wealth management advisor because there was no IRA account to manage. There was no brokerage account to manage. All their free cash flow and investments were into their real estate properties. And so at the same time, when we went through the Clear Picture Wealth program and the analysis, we found there were some significant holes that could lead to a liquidity event, right? Land and real estate's not liquid. In the event of the passing that would happen, there was debt out there. This client understood debt and the leveraging capabilities of it. The problem is we both know, Jason, right, is that if you are the one who takes out the debt and you're no longer there to operate and ensure the debt gets repaid, normally these banks are going to call their note. And so if you don't have the liquidity or the markets are down or we have a real estate crisis like we did in 08, 09, then you're left with possibly wealth being disrupted, right? We needed to put together a plan and create awareness around it. And that's what we did for this client. It's like, hey, did you know that your liquidity event is only X? Did you know that, oh, by the way, your wills and trusts don't identify how you're going to continue to operate in the event of your passing? What do you do in the event that interest rates start to climb and your debt ratios, starting to be where it is? How do you expand? All these conversations came out of the Clear Picture analysis, which led to, I need a relationship like this. I need someone else that can help me and be in my court, right? So we were able to identify things. Now, if we would have approached the same client, which I'll tell you this fun story, Jason, I did. For years, I just assumed that this individual had significant wealth and that that naturally had investable assets, right? So I kept dripping on him, as our industry likes to say, letting him know of some really, really good investment ideas and inviting him to investment seminars. He never attended. I didn't know why. Then it comes out one day when we introduced the Clear Picture Wealth Program story instead. He goes, I need that. Right. So that was there. We were able to find in our business model a way to incentivize my time and expertise, what we do every single day, for a fee that was aligned to benefit the client and add value beyond just managing assets. So that's really the quick story out there. I mean, we could do this same story with clients that have a large IRA balance and haven't retired yet, or clients that are teachers that have state pension plans that don't have manageable assets because it went into a pension retirement plan. There's a lot of different scenarios, but that's just the quick one I have. So I don't know if I covered.
That was the one that was in my mind as far as the comment that he made was around. I met with other people in your industry and they only wanted to focus on how much I could turn over to them to invest and not help me with everything else that's going on within my real estate, where that's where I have the need and that's where I have the want for help. And within the Clear Picture program, we're able to provide them that service. So if this is resonating with you, we want you to go to clearpicturefinancial.com. Go ahead and poke around, see what else we have there for you. But then you can also schedule a consultation with one of our specialists. And so, Andy, when I got to think about also the training that happens within an industry that could kind of create this scarcity, this feeling of give me your money, let me manage your investments, to then determine the quality of advice that I provide you. And it was like when you first started out, when I first started out, I'll speak to that story. It was around how much money could they turn over for me to invest. And when you're 22 years old, starting off in this industry, it's really your senior manager saying, hey, we'll do joint appointments, but like make sure like they have over 100,000 or more. You're just going to take that appointment on yourself. So it was kind of like these arbitrary numbers that the senior manager gave whatever their newer junior advisor was going to be. At the time, it was like that. Yeah. And so when I think about the program that we have and the structure that we created, like we had a person that came in, they're studying at MUSC, and so they're graduating and they're going to become a physician. We met with them. I met with them as going into the Clear Picture program, but they had a lot of student loan debt. And so we brought in Sean Thompson, who specializes in student loan debt, brought in a specialist to have that kind of conversation, so that it wasn't just looking at it from my own personal viewpoint. We were looking at the data, letting the data drive the conversation and decision, but then bringing in a specialist to then help facilitate what that next step and show them how to do this the right way. And I think that's the important part of the distinction. When we sit there and we have the meeting, we will show you what your numbers look like, why they're important. But those who enroll into the program, that's when we start to help them execute the how. How do you get these numbers moving in the right direction? How do we help you reach your financial goals? And how also do we offset these potential pitfalls or risk if we don't make these decisions? So we're able to have that conversation, and it's because it's around wealth advice, not wealth management. Yeah. And so, Andy, if most of your wealth is tied up in real estate or non-liquid assets, should you seek wealth advice instead of like a traditional wealth management approach?
I mean, I think everybody is seeking wealth advice and not wanting management. They just have they just don't know how to engage with us. So, I mean, at the end of the day, I think everybody wants to be more efficient on how they manage their wealth. They have hundreds of questions. I mean, go to the local bookstore. People still go to the local bookstore and look at all the self-help, right? We could probably run a ChatGPT and Google search on how many people research financial topics and what are the top ones, right? But common things like, whether it's real estate, Jason, or whether it's just life planning, lifestyle planning. I mean, I get asked the question all the time, should I pay off my mortgage or not? I mean, we're in this unique environment where the advice is probably not, right? I mean, why would you pay off, for example, a 3.5% long-term note on your house that's appreciated should be above 3.5%, and you're able to use that excess cash that you'd use to pay down, that's also paying you more than that. It just doesn't make sense right now. It doesn't mean that it may not make sense tomorrow, but as it stands today, it's going through that mindset. So just questions like that, where do you go? I love how you mentioned introduce Sean to the team right on this podcast, because we believe that approaching things as a team, and a team is defined by expertise and passion. Sean's going through, the student loan process, personally. You give a lot better advice when it hurts or it's closer to you, right? I mean, it doesn't mean that we're not going through it. We're just at a different phase of life. So if you're out there and you've got questions around whether or not to pay student loans, or how do you build wealth while paying student loans, that's where the team approach comes in. And that's where we urge people to reach out to our experts that we have who are going through very similar scenarios. The other thing I just want to add real quick on that is the beautiful thing about working with an advisor who puts advice at the front of the partnership and the relationship is that we bring in client experience, partnerships, the amount of knowledge that we go through. Maybe one off to those that are listening and doing this, like, hey, I might need to transition my business. Most people don't transition multiple businesses, or most people don't retire more than once, right? We've been through it with other clients. So we're able to bring that level of expertise and experience that we've seen what's worked and what hasn't worked. And we're able to relate that and give the better advice. So I just urge everybody, don't be fearful of going into an advisory office or engaging a relationship. The key question is, can you find the person that's willing to provide the solution to you, an advice-centric approach, without the question of how much money do you have to manage?
So this brings me to think of another teammate we have, Ryan Shannon, who has the CEPA, Certified Exit Planning Advisor. So when we work with business owners, they may not have a whole lot of investable assets. A lot of their net worth could be tied up into the four walls of their business. Mm-hmm. But then exiting out of that business, what does that succession plan look like? It's been very interesting to sit there in meetings and have Ryan do his thing. He was like, listen, like, you could die at the desk, right? That's a process you could take, but maybe not the recommended, right? You could then sell the business. Okay, what does that look like if you were to do that? You could also transition the business to a family member. What does that look like if you were to go down that path, right? So do we have these certain things in place so when a situation like that arises, we have a plan to then execute, right? Mm-hmm. Having Ryan sit there and have the conversation with the accountants around, what does this look like if we do this strategy versus this other approach? Mm-hmm. And then my background is the CFP, Certified Financial Planner. I'm going in there going, okay, what can we do with the accountant to talk about tax planning to offset how much we give to Uncle Sam on this business sale? There's things that we could do proactively in order to help mitigate what that could look like. There's pros and cons to everything in life, expect our spouses, right, Andy? Like, they're the only things that we have that are just positives in our lives. But then explaining those pros and cons on the business transition, right, to the client so that they understand and they can make a better informed decision. So we're talking about what the data looks like, and then why that's important, and then through the program and bringing in people in our team that have different areas of expertise is how we're able to help people make these better decisions and then execute into the program and the plan that we design with them. It can be for them, Andy, instead of just with them. Or do you find it most of the people you serve, you're doing it with them instead of just for them?
It just depends on what the client wants. I mean, some want to be involved and some just want me to give them a one-page summary, and say, here's what we did for you. Professional collaboration with partnerships. A lot of times, CPAs may not be the most proactive person out there because they don't know what you're doing, right? And so they need us to do it for them when they meet with their CPAs or attorneys, or better yet, just sit across the desk with them when they're having these conversations, right? We are incentivized to help people, which you nailed it on the head earlier. It's the reason we built the program and the way we did it is because we want to help make better, more informed decisions for clients. We want to simplify the complexity that people have with their wealth. That is everything we did. And that's why when those that want to engage with us, if you have a question around your wealth and you're sitting there going, which I've got a question about retirement. I got a question about transitioning my business. I got a question about whether or not I need to keep this or not keep this insurance, whatever it may be. If you have a question, that's when you should engage with us, because we didn't want to be told no when we built out this opportunity to meet with people, right? So the Clear Picture Wealth program right now is, if you engage with us, we're going to give you a complimentary clear picture analysis to determine if the advice is there to help you. And to answering your question there, Jason, that is, do you want to just take the data we provided in the clear picture analysis and implement it yourself with a little bit of coaching? There's people out there that want to do it. We'll know that. We'll help encourage that, because you don't need to pay for our team's time to help you implement strategies that you could probably implement fairly efficiently with just a little bit of coaching, right? Mm-hmm. But then there's others out there that are so busy with their time. Maybe you're in the medical profession, or it's got some more labor intensiveness to your job. If you're a business owner and you're just slammed on time, you're like, you don't have the time to do all these one-off meetings. That's when we come in and we do it for you, right? That's a bigger program. It's more of our time. Yes, it's a little bit more cost, but we know that. And then sometimes we always just do it. Let's just split the difference. I'll do some, you do some. We'll meet and review. And so we really tried to build the advice component, and the incentive is, you want better, more informed information and advice. We want to be able to provide it. We don't want to have to make the assets under management and how much you have the central focus on how we do that. So I hope that are listening and viewing today, that have the questions. Now's the time, right? If you don't have the answers to your wealth, if you don't have a clear picture to your retirement journey, your accumulation journey, now's the time. Don't wait. It's there. So yeah,
go and take advantage of it.
Yeah.
So we've been dancing around this question, but I just want to ask you directly, what role does wealth advice play in helping individuals plan for tax efficiency, estate planning, and liquidity needs when their wealth is tied up in, let's say, real estate or even business ownership?
Man, you nailed the question right out of my brain on that. I just was working with one of my clients the other day, and he keeps bouncing. I'm going to retire this. I'm going to retire that day. Well, most people out there that are listening, right, Jason, may not know that if you have a 401k and you are over 5% ownership, let's get into the nerdy details in the last few minutes we have, then you hit the age of required minimum distribution requirement date. So that's 73 right now. Then you have to take RMDs from your 401k balance. So I was mentioning to this client, hey, what's the game plan with your transition? He goes, I am going to transition out and sell next year. He turns 73 next year. I'm like, can you sit down with the rest of your partners and can they buy out? He owns 10% of the company. Can they buy out 6% of you in this calendar year so that you can avoid having to take the required minimum distribution on your significant balance inside the 401k plan until you find out? Because he's like, well, I'll sell out, but I'm still going to stay involved and still get paid, right? Is that will happen. So yeah, that alone, I don't know the tax savings on it right now, but it's probably something that it's not top of mind for this particular client. So bringing that into the equation was identified in our program because we knew he had a business asset. We knew his age, right? It's just a matter of when are you going to actually sell out. So he was going to wait till January to sell out 100%. Now we're in the discussion of let's move that timeline up, and maybe if it's cash flow, let's buy 6. Otherwise, we got to look at the taxes on this year as well. But that's one of the scenarios.
I love that story, and I'm going to steal your thunder in this other story.
Yeah.
A potential client in Oregon. Oregon has state estate taxes, and they have assets that will be subject to that state estate taxes. So having a proactive conversation with them about what does that look like if you were to stay there throughout the rest of your life versus moving, right? But let's assume that you're going to stay there from the conversations that we've had. Then if that's the case, then we're going to have to explore these other things to create liquidity within the estate plan to offset these taxes. These are the conversations that we're able to have with our clients because of wealth advice. If we were just focusing on wealth management, which is what typical financial advisors are doing in this industry, and it's because this is what they've been taught. This is what they were taught. So as we wrap up, we were taught the same things, Andy. However, we decided to break away from that approach because of the wealth the wealth advice approach that we take within the Clear Picture Financial Program. We wanted to see how can we help people who typically wouldn't have gone seeing one of our counterparts because they were always about, hey, how much do you have under management for me to then determine the quality of advice I provide versus taking a look at the entire net worth and seeing where there are areas of strength, where there's areas of weakness, where there's gaps, and helping fill those gaps within the program. If this is of interest to you, obviously at this point it would be because you're still with us. This is where we want you to take that next step. Go to clearpicturefinancial.com. Watch Andy drop some amazing knowledge on the video. Watch some other videos that we have, white papers that we have, things that are really interesting and tangible for you so that you can go out and make better informed decisions. And when you're ready, reach out so then we can schedule a time with one of our specialists to have a conversation to start your Clear Picture journey. That was Andy, the Man Merchant. I call him ATMs now. I am Jason Noble. I'm your host of 20 Minutes of Clarity. Thank you so much for joining, and we appreciate you. We'll see you next time.